Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with Remax Escarpment Realty. And here's our little real estate barker, Teddy Bear Howell, here for the ride and keep us some good company here. Today is April 30th. Oh, thanks for the kisses. What is happening in our local markets? Let's start with some headlines. Globe and Mail says cottage owners rush to sell ahead of capital gains tax changes. Lowering prices and amending closing dates are happening right now to try and avoid the increased taxes. Because we know, it'll go down. We know that on June 25th, if you haven't got your capital gain completed, then you're going to have increased taxes based on the recent changes. The best strategy, according to experts and including myself, is to hold off on selling if you weren't planning to sell. Don't rush into a deal just because of the tax changes. Another question, should you be emptying your TFSA to pay down your mortgage before it renews at higher rates? This is just a point of discussion that I wanted to bring up. So we've got a lot of renewals coming up in our country. According to CMHC, in 2024 and 2025, there's going to be up to 2.2 million mortgages getting renewed, representing about 45% of all the outstanding Canadian mortgages. So should you empty out your TFSA to pay down your mortgage? It depends on your risk tolerance, right? The financial markets can be volatile, but if you pay down your mortgage, that's a guaranteed return and a guaranteed safety in terms of your financial situation. So I would say I'm more conservative in this regard. I would say pay down your mortgage is a great idea if you're concerned about the increased payments. If you're not concerned about the increased payments, then just carry on as usual. No need to change anything. So it really depends on your risk tolerance there. We are expecting mortgage rates to likely be coming down starting in June, probably starting with a quarter point as well, as what we've been hearing for the last several months. We're leading up, it's getting closer to June. What's happening in our Remax Escarpment, Remax Niagara Appointment Center? This describes the demand side of the business. So as we approach the end of the month, our appointment center booked 3,236 total appointments, which is a 1% increase over the previous week. Despite seeing a year-over-year decrease, monthly appointments, we saw sales overshadow new listings by 16%. Our appointment to sold index dropped again this week, returning to where it was 4 weeks ago at 8.9. So this is actually very aggressive on the buyer side. This is illustrating renewed buyer confidence. Inventory is still holding steady while sold properties continue to surpass new listings, and we have yet to see a shortage in properties despite this trend. So this is really interesting. So 8.9 appointments on average to get a property sold. This is not very many appointments needed at all in a general sense. What's specifically happening in our local markets? We've got in the Burlington area 449 active listings, which is up from 442 a week ago, and 252 sales in the past 30 days, which is also up from a week ago, giving us 1.78 months worth of supply. So pretty tight inventory, really, less than 2 months worth of inventory, which has been the case for the past several weeks. 56.5% on the absorption ratio, which has gone up from 52.94. So the absorption ratio above 50% is considered seller's market territory. So in Burlington, we're in a bit of a mild seller's market right now. Listing cancellations and relists are on the rise. Median days on market unchanged at 11, which is a very short time, and average days on market 20. Also a very quick turnaround right now for many of the listings coming out. In terms of negotiations, we're seeing a median sold price versus original list price ratio of 98.64. So it's unchanged from last week. So this means that typically right now, in terms of a median, we're seeing about 1.5% of negotiating range. We are also seeing a lot, I'm not looking at the average, this is the median. If you look at the overall average, it's a bit skewed right now because we're also seeing some agents taking the strategy of underpricing a property, holding offers, and then generating offers over the asking price, not necessarily for higher than market value, but higher than the asking price. What do we got here? In the Hamilton area, Hamilton, 1,580 active listings, up from 1,534. Sales in the past 30 days of 596, 2.65 months worth of supply. And we've just ducked underneath 50%. We're at 48.97% on the absorption ratio, indicating that we've tipped into a buyer's market side in the Hamilton area. Cancel listings are similar to last week, and we've got median days on market of 15, which is up 1 day, and average at 28, which is up 2 days compared to last week. 98.21 on the sold price versus original list price ratio. So we're just about 2% roughly on successful transactions for negotiation. In the Oakville area, we have currently 415 active listings, which is up slightly from 400. 175 sales in the past 30 days compared to 163. 2.37 months worth of supply. So that's down slightly from a week ago. Definitely in a buyer's market in the Oakville area at 43.97% absorption. 12 median days on market unchanged, average at 20 days on market, which is up 1 day compared to where it was. And we're seeing typical successful negotiations in around that 2% discount based on the median. That's all I have for you this week. I'd love to hear from you. Please reach out, and we'll see you next week.